George Soros' reflexivity theory is one of the most fascinating and controversial ideas in the world of global finance. It challenges the widely accepted belief that markets are efficient and rational. But what if markets are not a reflection of reality, but a distortion of it? What if investors do not simply react to the world, but actually reshape it? Soros asks us to question this. Are market prices accurate signals, or are they illusions created by human psychology, fear, greed, hope, and misunderstanding? In traditional economic theory, financial markets are seen as perfectly informed systems. Investors make rational decisions, and prices ultimately reflect the true value of assets. But Soros saw something entirely different. He observed a world driven not by logic, but by biases and misconceptions. Reflexivity, as he defines it, is the dynamic interaction between perception and reality. What we believe influences what is real, and what becomes real shapes what we believe. It is a feedback loop, a cycle, a powerful force capable of building and destroying fortunes, companies, and even nations. Imagine a stock price rising not because the company improved, but because investors simply believe it will improve. That belief attracts more buyers. The price rises further. Now the company, suddenly richer due to a higher valuation, can expand, borrow cheaply, and grow. A simple belief has created a new reality. But what happens when the belief breaks? That same reflexive loop can reverse. Confidence collapses, investors flee, prices crash, and the company, once thriving, faces bankruptcy. Myth becomes truth, and truth becomes ruin. Soros saw these cycles everywhere, in housing bubbles, currency crises, political upheavals, even global conflicts. He believed the biggest danger in economics is the illusion of certainty. So let me ask you, how often do you make decisions based on what others are doing rather than what you truly know? When markets soar, do you assume you must buy because everyone else is buying? Have you ever wondered why panic spreads faster than calm in reflexivity? Humans are not passive observers. They are emotional participants. They influence outcomes through expectations, rumors, and narratives. It is a market driven by storytelling. And Soros, he became the master storyteller. His greatest financial victory, the bet against the British pound in 1992, was a real-world demonstration of reflexivity at work. When Britain joined the European exchange rate mechanism, the value of the pound was artificially supported. The government insisted the currency was stable, but Soros perceived weakness. He asked a simple but dangerous question: what if the belief in a strong pound was false? What if reality could be changed? He shorted more than $10 billion worth of the currency. When markets realized Britain could not maintain the illusion, panic spread, the pound collapsed, and Soros made over $1 billion in a single day. They called him the man who broke the Bank of England. But Soros would argue he didn't break anything. The system was already broken. He merely exposed the truth hidden beneath a false belief. So think about this. How much of our financial world, housing prices, stock valuations, even crypto markets, is built on belief rather than tangible value? If everyone tomorrow decided Bitcoin was worthless, would any technology behind it matter? Reflexivity suggests value is not discovered, it is created, and sometimes destroyed. Many economists rejected Soros' theories for years. They said his ideas were too psychological, too messy. They preferred clean equations over human emotion. But look at the world now. Meme stocks skyrocketing due to online hype, housing markets inflating from speculative desire, governments printing money to maintain confidence. Does any of it look rational to you? Are we in control of the market, or is the market in control of us? Reflexivity forces us to confront an uncomfortable truth. Our beliefs may be fragile. Our understanding may be incomplete. and the financial system we trust may be more unstable than we want to admit. If reflexivity is real, then predicting the market is not a matter of studying the past. It is about anticipating how collective belief will evolve. Soros once said, "I don't play the game by waiting for the market to prove me right. I act to make it right." In other words, he does not bet on what is, he bets on what could be if enough people believe it. Let's go deeper into this idea. Soros identifies two functions happening simultaneously in every human mind: the cognitive function and the manipulative function. The cognitive function is how we attempt to understand the world. The manipulative function is how we attempt to influence it. Most investors assume they are only observing, but in reality, every decision they make influences the system. Reflexivity means we are both students and authors of the market. When you buy a stock, you are not only reacting to information, you are creating new information for others. That's why rumors shape reality. That's why confidence can inflate bubbles. That's why fear can trigger crashes. Human perception is a powerful economic force. Soros argues that the biggest market movements are rarely caused by fundamentals alone. Instead, they emerge from misinterpretations that become widely accepted truths. He calls them fertile fallacies, ideas that are wrong but highly believable. For example, during the 2008 housing crisis, millions believed home prices could only rise. Banks believed it, governments believed it, families believed it, and because everyone believed, the bubble grew. But the belief wasn't reality, it was the illusion before collapse. When fear finally replaced optimism, everything reversed. Reflexivity gave birth to the bubble, and reflexivity destroyed it. Here lies Soros's core insight. You don't need to know the truth to move markets. You only need to know what people will believe next. So let me ask you again, when you see a rising market, do you chase it because you think it has value or because you think someone else will think it has value? Are you an observer or a participant pushing the wheel forward? Soros's critics accuse him of causing chaos for profit. They see him as a manipulator of global events. But his supporters claim he simply understands how fragile systems work and protects them through warning and intervention. So which one is he? A genius who exposes weaknesses in unstable structures, or a villain who exploits them for power? Perhaps the real question is this: do we hate him because he breaks the illusion, or because he shows us how easily we were fooled? Reflexivity extends far beyond money. Soros believes it shapes politics, media, and social movements. A rumor can become a revolution, a prediction can become a prophecy, a fear can become a war. We do not live in a world defined by facts, we live in a world defined by beliefs fighting to become facts. As you finish this story, reflect on your own belief system. How much of what you think is based on objective truth, and how much is influenced by what others want you to believe? The market is not a machine, it is a mirror. It reflects us, our hopes, our fears, our illusions, and sometimes it reflects monsters we created. George Soros has spent his life studying those monsters, battling them, and sometimes using them to his advantage. You may admire him or despise him, you may agree with his philosophy or reject it, but one thing is undeniable: reflexivity has changed the way the world understands finance. And if his theory is right, the next big market shift won't be caused by numbers, charts, or economic reports. It will begin with a belief, perhaps yours. The question is, will you recognize it before everyone else does? Thank you for watching and diving deep into the mind of George Soros with us. His reflexivity theory challenges what we think we know about the markets and maybe even about ourselves. So tell me, what do you believe moves the world? Facts or illusions? Share your thoughts in the comments below. And if you enjoyed this video and want more powerful stories from the world of global finance, don't forget to like, subscribe, and hit the notification bell so you never miss what comes next. See you in the next episode. Stay curious, investors.